Hello and good morning everyone. This is the 8th of September. It's a Sunday morning, almost 11:30. I'm going to quickly take you through what happened last week and are we headed for more downsides or not? That's the main concern. Looking at the Nifty chart, three different time frames, the weekly, daily and the lowest time frame I'm looking at is the 75-minute chart. And you can see that I've got some stuff going on in the lower time frame to figure out from where we can find the bounce back. But let's do a top-down approach. Let's first take a look at the weekly charts. Now I use Heikin-Ashi candles, and the Heikin-Ashi has just given me a red HHGB, which I like to call it this way, and it's telling me the market is headed for some consolidation, correction, slowdown. So I asked the weekly chart from what? And clearly it had given us a wonderful rally, and so it's time that the chart should slow down. That's the view from the weekly time frame. Triggers, I would say, if last week's low is breached the coming week, expect some more weakness. But more importantly, if the next week, next Friday, we see a close below this low for the Nifty futures, last week's low is around 24,855, let's say 24,850. If it closes below 24,850 next week, then the chances of further downsides or the chances of a structural weakness increases. So weekly time frame, structurally positive, but we are headed for some more, let's call it slowdown. Will it lead to a consolidation, a range bound consolidation, or will it lead to more correction? That time will tell us. Coming to the daily, we've got the first blow, the first cut. The trend has not reversed completely yet, the way we look at it. The momentum indicators have not reversed completely yet, but definitely close to a 300-point fall on the Nifty is not a joke. So what I've done is I've broken down this sell-off in terms of the lowest time frame that we track. That's the 75-minute time frame. This I've used the Nifty futures. And my concern is the last leg up. This was the last one-way leg on the upside. Few tools that I've implemented. One is the volume profile. Second, I've got the anchored VWAP from the lows at this lowest point. And then I have drawn a Fibonacci retracement and a Fibonacci projection. Not bad. So what's the find out? Well, number one, trend momentum are both down. Heikin-Ashis and our indicators are not suggesting any sign of selling slowdown. Okay, which means that we can expect this market to fall further down. Which means that we should figure out till what level can it fall, where can I expect some kind of a support. So in terms of volume profile, I can see that the next level of a bit of a volumes that had happened in the past is somewhere around that 24,600, 700 zone. Anchored VWAP has been taken care of, so I don't think this anchored VWAP is going to give us any clarity going forward next week. The good thing close to this 24,600, 24,700 zone is I have a confluence of two Fibonacci numbers. A projection which is coming from the top, that's a target, as well as that 61.8 retracement. Now it is interesting to notice that in this particular zone, it happens to be that the previous breakout was also close to this level. Now if we pinpoint, or I would rather say that let's keep this drawn over here so that we can view it as and when if the market comes down to this area. And I'm going to give it a slightly, let's give it blue so that it stands out. And we will see whether the market number one comes down to these kind of levels or not. And if it does it manage to see some kind of a selling exhaustion or not? So what is this level? This level is around 24,600, as I was telling you, to close to 24,660, 24, we can extend it. 24,600, 24,700 will be easy to remember. Nifty future levels. So view from the Nifty comes bearish, short-term bearish. Unless we see signs of selling slowdown, there is particularly no need for you to start buying. Number one. Number two, the broader markets. Now, what I've done is I've created a grid of charts, one for broader markets, one for the bank nifty and the financials, and the third one, the rest of the sectors. First, we'll take a general overlook, and then I'll drill down to the individual charts. This is CNX 500, and we're going to talk predominantly from the weekly point of view, and these are the ratio charts at the bottom. So CNX 500, you talk about the mid cap and the small cap. There's no particular strong sign of weakness per se. In fact, the small cap and the mid cap index both gave us a breakout to a new all-time high. However, if you check the ratio charts down here, you'll find that the ratio charts have not managed to give that kind of a breakout. So both the mid cap vis-a-vis CNX 500 and the small cap vis-a-vis 500, the ratio is kind of consolidating. So do we get any clear cues out of it? It seems like the broader markets are still showing strength. It seems so. We don't have a reversal. I can say that the ratio chart of the small cap has reversed the momentum. So if I have to pick any one from the mid cap and the small cap, which can fall faster first, if the overall market comes down, then I think it can be the small cap. Now I said I think because the momentum indicators are a leading indicator, but the confirmation from the price is most important. So if you're looking for some weakness within these broader markets, small cap can be the answer going forward. The most important heavyweight indices pocket are the financials. So bank nifty, you can see that it's consolidating. You can clearly see the ratio chart of bank nifty vis-a-vis CNX 500. It's underperforming. If you remember, Nifty hit an all-time high. Bank nifty is significantly below its all-time high. So this is getting clearly reflected over here. And I strongly sense so that if the Nifty again manages a nice bounce back and goes to an all-time high anytime soon, if something like that happens, then this particular pocket has to play out significant role because it has been underperforming for a significant amount of time in terms of ratio charts. And so some kind of a reversal is very important. Bottom line, if you see the markets holding, if you see buying coming back to the market sometime in the future, keep an eye on the banking names, especially the private sector banks. Finance, though underperforming in terms of the ratio, the charts are pretty strong. We have seen a beautiful move coming in from Bajaj Finance, Finserv. So I'm bullish on finance. I'm not looking to short the bank nifty nor the finance. However, when it comes to PSU bank vis-a-vis the private bank, if you follow my work, if you like it, do let me know, comment, like it, share your thoughts. So if you follow my work, then you would have noticed that for the last few weeks, I've been saying that the PSU banks making a rounding top has created a short-term downtrend. Momentum is supportive. If the banks come down, maybe the PSU banks will come down more than the private sector banks. And I'm quite glad and happy that exactly the script is playing out. So just rewinding back to, going back to the few minutes back when I was saying looking for strength from the bank nifty, look strength within the private sector banks. The PSU banks may underperform a little bit further. In terms of ratio charts, you can clearly notice that all of them have been underperforming significant the CNX 500. So it's about time whether the ratio charts starts to improve, which means that relative strength is kicking in. I will update you once I see that. But as of now, don't try to short the bank nifty or this CNX finance. On the other hand, if we see revival, look for private sector banks. The next grid is primarily the rest of the sectors. Okay, and these are all weekly time frames. You can see I have this. I'm looking at it from a clockwise point of view, and the arrangement of the sectors are in a clockwise manner, wherein I've put the weightage wise. The sectoral weightage of IT is more than energy, is more than FMCG, and similarly least coming down to realty. So I've put it in a clockwise descending order of the weightage. IT strong, energy still going through that slant divergence, creates a bit of a slowdown, difficult to short this at this juncture. FMCG pretty strong, means I'm just looking at the trend, I'm looking at the Heiken behavior because Heiken behavior is very strong, and I'm looking at the momentum reading and just taking a overlook call that which sector is showing some weakness or strength. Auto slowing down, contrarian behavior, can come down, can. Pharma exceptionally strong, forget it, don't even think about shorting these kind of charts. Now you take a look at the metals. Now you take a look at the real estate, and I did show you the PSU bank, and you'll notice that on my right hand side I have marked these sectors red: the metal, the PSU bank, and the realty. The main reason I have marked these three, let me take you to my main screen. The reason I have marked these three is, if I'm looking for weakness, if I'm a derivatives trader, I'm looking to go short, I want to find the pocket of weakness. I don't want to short a pharma FMCG in this market because they are, in terms of charts, they are very strong. They do have an attribute of play as a defensive play. So why will I short an FMCG or a pharma stock or even an IT? I would find where lies the pocket of weakness or relative weakness. So on the weekly charts, is there any sector which has already turned into a downtrend and the momentum is still down? Metals. Is there any sector where I have the same reading of the downtrend and the momentum on the weekly time frames? PSU bank. And is there any sector which is again the same logic of downward M1 readings, momentum readings on the weekly time frame, and the trend? Now in reality the trend is not completely down, but you don't need me to tell you that it is in a 3-week consolidation. It's a make or a break situation, and if the market falls, these things will break. So I would suggest, number one, if you are a derivatives trader, look for pockets of weakness. These three are clear-cut pockets. You would not want to get on board heavily on the short side right now because the overall markets are not that weak. It's not weakened enough to go confidently short. It's still at this juncture, any short attempts are slightly risky in nature, right? And keep an eye on few major large cap index heavyweights, which can give a bit of a support to the market. One such stock that I would like to talk about and end my video is HDFC Bank. Now, if you look at HDFC Bank from the point of view of the weekly and the daily time frame, you will clearly notice a multi-week consolidation. Clearly, it's buying time. And it's buying time after a fall. If this turns out to be a continuation pattern, it should break down. But trust me, continuation patterns do not waste so much time. Whenever the patterns tend to be longish, the possibility of a reversal creeps in. If this pattern was relatively smaller, continuation makes more sense because continuation patterns, they want to continue the trend. Why will they buy so much time? So I don't know whether HDFC Bank will actually break down or break out. What HDFC Bank tells me right now is it's an heavyweight. It's an index heavyweight, Bank Nifty heavyweight, Nifty heavyweight. And an HDFC Bank's 5 to 10% move up or down matters to the market. And this guy is contracting, consolidating. It's waiting for that move. So keep an eye on these kind of stocks, a Reliance, a Larsen, an SBI, an HDFC Bank, iBank. I have a list of 24 top Nifty stocks. If you're keen, let me know in the comment box. I'll be happy to share this list with you. If you use TradingView, you can just use this. These are the main stocks which moves the Nifty up or down. So signing off by saying that Nifty still looks bearish. We are headed for some more downsides. Whether that some more downsides will lead to a much larger, bigger fall towards this level, that I think time will only tell us. That I think the levels that we just discussed, whether those levels are kind of respected or not, that will matter. That will matter a lot. And in terms of the levels, this is the GIFT Nifty. This is our Nifty futures. We discussed 24,600, 24,700 levels to keep back of your mind. Go selectively short. Do not look for longs right now. Last but not the least, if you're a long only, pure directional cash market trader investor, this is exactly the time where you take a break. This is exactly the time you patiently wait. Or if you ask me, I'm going to start thoroughly getting my weekly, monthly charts ready, finding those stocks which after a bit of a correction has hit good supports and can be a buy on a dip. So I'll be starting my homework and creating a watch list of stocks which I would like to add to my cash portfolio if this particular correction extends. Probably I'll get clarity end of the month, but start the work now. I hope this was useful. Please do let me know. With this, goodbye everyone. Take care. Next week, trade well.